Guten Morgen, everyone. Today we'll be going over break of structure. I'm going to go on MS Paint just to make it easier to go over. A break of structure is very simple. You have a push up, you have a small push down. Your levels will be that recent high. A break of structure is when you close above this level, meaning the candle closes right here. This is meaning, okay, we have a close above on the 3 minute, of course. You shall get continuation to the upside. Now this is only one variation of the break of structure. There are two others. You'll have, this is what I call, just the original break of structure. You have some break of structures that close all the way up here, past the level, and this is what I call an overextended break of structure, which usually you want to retest of this level before you continue up. Now what this does, it also gives you an opportunity for another break of structure right here, but also this would be your best entry instead of having to enter off of the close where it's overextended. Now sometimes even with an overextended close, it will run without you, and that's up to you if you want to take the risk. You can size in here, size it more here, but that is up to you of how you want to play it. Now the last type of break of structure will be an inverse break of structure, meaning you get a candle closure right here, next candle closes right back below, and it has to be the next candle. It can't be, one candle here and then we get a close up here and then we close back below. Next candle needs to close back under, and this is basically a fake out for the break of structure, which now you should get continuation to the downside. Now understand break of structures are overall going to have lower probability than reversal trades. Break of structures are something that you would want to stay away for entries and use it more as a confluence of continuation or at least confirmation for a reversal. And I'll give you an example of that in a bit. With break of structures, you want to understand that your risk reward is complete dog shit. Your drawdown will be a lot more increased, and your profits obviously not as much as you would with the reversal trade. For example, let's draw it. Here's your reversal. This is your entry. This is your break of structure. This is your continuation, right? Now from here to here, that's TP1. That's 20%, that's 20, 30 points on NQ, however you want to do it. This continuation is not guaranteed. From this, you can get a inverse break of structure, meaning we retest lows again and you get stopped out break even before it continues. Or even here, it continues down to the downside. Now, speaking as if you were to enter, off of the reversal, your stop would be here, or technically break even once you get your trim, but your stop would be here and this would be your TP. With a break of structure, technically speaking, your stop would be, relatively right under the level, but with that, you can still come down here, reverse off this, and get that continuation like I was saying. So technically speaking, your trade isn't wrong till you get a close under, let's call this low a day. So if you don't close below low a day, then your trade's not on the wrong, but your risk reward is literally, I don't even know, 10 times as much more as, or less than it would be here. Now, when you have a break of structure like this, you get your continuation, you can hold your trade, hold your cons, you can trim, however you want to play, it's up to you. But you want to treat this as a secondary entry, either to size in, trim, or however you want to play it again. But this should not be your primary entry. This should be. Now, break of structure, some people have trouble trading it. So I'm just going to draw an overall, let's say, day of the market that will have multiple kind of ups and downs, however PA is. Now, ideal entries are anything that's going to be green. That would be your ideal entries. Unideal entries would be anything that would be considered a break of structure. So this would be considered a break of structure. Pretend this is a pretty bigger break of structure, break of structure, break break a structure, break a structure, break a structure, break a structure. Now, let me fix this. This would be an ideal entry as well. Okay. And let's go through it. Let's say this is pre-market high, you reject, you dump, you pretty much top tick the market, good job. These breaker structures let you know that it's going to continue running down. Now, as you can see, the lower you get with these breaker structures, by the time you get to 3 or 4 breaker structures, the move becomes a little bit less impactful, I guess, or not as big. So, understand, if you're trying to chase, or let's say short at low a day or long at high a day off of a breaker structure, the chances are that you would most likely either get stopped out or it's just not a good risk reward trade. And to actually get a good risk reward out of it, it has to be one of those days that we either just dump all day or pump all day. But to catch that, after you missed out on a good entry majority of the move, it's not worth the risk. Now, good entries with these green ones would be anything based off reversals. So this is a reversal, this is a reversal, this is a reversal. When it comes to reversals, you can see that this technically would be a fake out for breaker structure, or if you want to call this, you can see where it starts to become a little bit less consistent in certain areas. Again, that's why breaker structure is not the best to take a trade off of. So I'll show you this, live. For example, you have your low a day, and now you have a breaker structure right here, and 2 things that price does. Oops. Price closes under, it pushes down, gets rejected right off of low a day. So this is what I was saying when you do not want to take a breaker structure trade when there's support or resistance right above or below that breaker structure, because there's not a lot of room to go. Now, in this case, technically speaking, you get that retest of breaker structure, it holds, it turns out to be a decent trade. And this is a secondary breaker structure that you have to show you that continuation. But you can see where it starts to show a little bit of weakness, that it doesn't want to go anymore. This breaker structure to the upside was perfect. You get that continuation. You get, no problem with it. Easy peasy. But when you start to get into here, this is where it gets tricky, where, you close above here because now you have this level of resistance, this level of resistance, and this level of resistance. Now, when you're trading breaker structures, you obviously have to be aware to have all your levels marked for 1, because you need to make sure there's room for continuation. As you can see here, white candle closed above, no room, pushed back down. That's my point. Until you close above, which with that being said, it creates a new wick high, which then you get a breaker structure and continues higher. But you can see, since we also closed above resistance, that is why we could go higher. After that breaker structure, you can see price retested this once, twice, and then continued. So this wasn't necessarily an overextended breaker structure, but when you see it kind of hold right above that level and it wicks off, it should kind of give you more confirmation behind it, which would increase the probability of that breaker structure working out. Obviously, beware of this level right here, but overall, it was a better probability trade to take. Now, for example, even this trade, which was a breaker structure, you get an overextended close. There's no exact retest, but after that close, you get a pretty good move down. However, same thing here though. Now this is the breaker structure, which at this time would be a low a day. You close under low a day, you get a small continuation. This is where you need to have good risk management, because breaker structures, since they're worse trade in general, you need to have better risk management. If you're not trimmed and break even out of here, you're going to lose, which you can see pretty much reversed as soon as you would have gotten your TP1. That's something that is very crucial and that you have to be aware of. Um, Understand breaker structures work on more on certain days than others, and other days you'll get more inverse breaker structures or more fake outs back to back than you would on obviously other days, depending on volatility or just the type of market that it is. Now, when you're trading breaker structures, I don't know if I already said this, you want to make sure that you're trading inside of today's range. Meaning, if this is the range of today, you're playing breaker structures inside here. You do not want to play breaker structures that are outside the high day or low day. You're basically longing at high day and shorting at low day, and you're hoping for some sort of continuation. You want to again pair it with a reversal for you to get, a good response out of it. So this was Monday. We shorted up here for shorts, obviously, but off a pre-market high. This white line or that blue line is a breaker structure. That breaker structure paired with this shows me okay continuation. What do we do? I'm gonna just draw a white line so it's easier to not treat these as a support level or specifically support levels. Same thing here. What happens? Overextended close, retest, dump. This is also a level. So since we closed below both or broke both structures and retested both and held under and retested again, it was good for a continuation. So this is let's say this entry here to me is a shitty entry because the retest or because the close was pretty much overextended. Either here or here would have been considered a good entry, even though it's not the best. This would be the best, or this breaker structure here, because you get the retest, you get a hold, and then you get that dump that you wanted. And with that being said, I mean, it's easy just to play off breaker structure, retest, continuation, and you just rinse and repeat the process. You can see where some breaker structures necessarily don't work. Also keep in mind, you want to take the breaker structures inside of pre-market range. After pre-market range, this would be your last breaker structure to take for that actual continuation for the day. Usually if you get a close above or below pre-market high, you'll get a pretty good continuation. For example, pre-market low close, continuation, pre-market high close, continuation, pre-market high close, continuation. You get the point. Other times you'll stay pre-market low continuation. Other times you'll stay in a range like this. Okay, perfect. Breaker structure is the same thing as a close above or below support resistance. Inverse breaker structure, continuation. Now some will be a lot more what do you call it? A lot more kind of textbook than others, and other ones will be a little bit uglier. That is up to you of which ones you want to take. The more textbook it looks, the basically higher percentage that it works. So, with that being said, this is a textbook breaker structure. You get a, instant continuation, but obviously that doesn't mean you're going to just pump up from here all the way back up to pre-market high. Yes, it's a possibility, but probability over everything. After this, you also want to make sure you're going TP1 and break even. Breaker structures are pretty much made for scalps, and if it continues, you make your extra money. If not, you're break even. That's the biggest thing is you need to have good risk management when you're playing break or just trading in general, obviously. But breaker structures is something that you would need a tighter stop or a smarter play about than you would with reversal trades. Just to quickly go over reversal trades, as you can see, look at this beautiful entry of a snipe, right? This is my entry off of this. Push up, contracts went like 400%. What do you do again? Retest, push up, contracts go another 400%. So you can just spam, these entries, and your stop is literally right under this level. You're having such a tight stop, your risk to reward is great. It either hits or it doesn't, but again, over the amount of trades you should be taking, one of these are going to hit and it's going to win big or win a very good amount. Now, what do you call it? sometimes you'll have a inverse break of structure. In this case, close above, close back below. But again, you need to make sure you mark all your levels because that inverse break of structure happened because of a resistance level, not just because it was a fake out for the break of structure. So you need to also differentiate, are we inversing the break of structure because we're inversing the break of structure, or are we inversing the break of structure because there was resistance right above the level? Now, when it's off of a level, again, easy peasy, you would enter here, stop loss here, short it. But if you're trying to enter off the break of structure, now you can see where that leaves room for mess ups. So again, break of structures are not your number one entry. This is the same case down here. You get a break of structure, no inverse, but there's support right under low a day. Again, you should not take this because it's an ugly setup. So this is something so simple that will increase your probability of break-in structures working overall just because you're not taking these certain traits. You want to be kind of selective with your break-in structure, where it's at, where it is, and make sure it has room to go. And also be real with you. For you to be, oh, I'm gonna take this break of structure and hope it closes under here and just dumps more, you're being greedy and you deserve to lose if you lose. So it's simple as that. Some people left some questions in the channel of the Discord of what they wanted me to go over in the YouTube video. Can you rate support and resistance in order? What's basically strongest to weakest? Anything that's the high or low of the range I would say is the strongest, whether it's pre-market high, pre-market low, today's high, today's low, whatever, would necessarily or would most of the time be the strongest. I can show you multiple examples real quick. Low a day retest, pump. Low a day retest, pump. Same thing Monday. Low a day retest, pump. Low a day retest, pump. Pre-market high, retest, dump. But you can see pre-market low, we still had a reaction off of it, but it wasn't a crazy, push up. So consistency though, 1, 2, 3, 4, 5, 6, 7, 8, and then 8 out of 9 kind of throws you off, but again, you're still 8 out of 9 on complete reversal trades. Pre-market low here, let me mark it. Instant reversal was beautiful. So if you want to call it 9 out of 10, 90% win rate just by playing that alone. Anything that I would consider weak are break of structures or those intraday inside levels that would be weaker. Someone asked, can I, how to explain to read order book? I do not use order book. I keep trading as simple as possible. The most I'll use is volume, and even then, I'm not using it like that. I use it more just kind of as obviously a confluence, but even then, it's not, something I'm looking for to enter a trade off of. The simpler you keep it, the easier trading will become for you. And then someone asked, how do I use volume? Which is perfect because it's very simple. Let me go to a blank chart. This is a reversal point. And let's say on the bottom is volume, which I'll do with the pink line. With volume, as you're heading towards a reversal point, what would increase the probability of that actually rejecting the level and not closing, you would want to see volume decreasing bar per bar as we head towards this level. So volume decreases means there's higher probability that we would reject. If volume is increasing as we get to this level, then probability is that we would want to break to the upside. That's literally it. It's simple as that. So right here, you can see volume is increasing. What do? Break a structure, boom. Simple as that. We as we're, coming as to low a day, we're coming down for a retest. What does volume do? It's decreasing right here. It's getting smaller. Boom. As volume gets that break of structure and starts to pick up, look, right at the break of structure, volume increases and you get that continuation. It's kind of hard to see because they're small, but you get what I'm saying. So, I mean, it's simple as that. You just kind of pair with that. Again, that is not something you're going to be looking towards to let you know, oh, this is, I'm going to enter because volume's doing this. Volume is more of a backup if you don't know what's going on. And it's just good to see overall what the volume's like, just so you know if it's going to be a little choppy, a little slow, whatever the case is. But that's pretty much it for breaker structures. I would say again, keep it as simple as possible. And yeah, I'll see you guys in the live.